Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, click that like button, and share these videos. Yesterday's action was very interesting as we saw the market surge well above the 200-day moving average. The configuration suggests that prices are likely to continue higher over the next 5 to 8 days. There will be challenges ahead as we continue to see bad economic data be released. No surprises from the Fed Beige Book yesterday. Everything was negative. Everything's been downgraded as expected. We will see jobless claims come out showing approximately another 2 million jobs lost over the last week. As the carnage in the economy still is happening, the disconnect of the fundamentals versus the markets continue to happen. As I mentioned in yesterday's video, there are a number of on-schedule things that are happening, and probably the ultimate Twitter war between the president and Jack Dorsey will be very interesting. The problem is that the president has a lot more power, or it would appear, because at a stroke of a pen, he can change a lot of things for Twitter and for some of the other big tech companies. The concern here, from my viewpoint, is that this could trigger some selling in the tech companies depending on what type of action is taken and whether the markets consider it to be material. The other thing that has happened, China has taken over Hong Kong. This has been a long-awaited event for 20 years. I remember back in '99 when China was taking back control of Hong Kong, everybody was worried exactly about what happened yesterday. It's going to be interesting to see how this plays out, as Trump has already said that there's going to be drastic actions based upon what China's decisions over the last couple of days have been. So things are going to get pretty interesting. They could set up some headwinds for the markets, but the technicals continue to suggest that the markets are going to move higher. The last thing that I saw, Mitch McConnell from the Senate is talking about the fifth relief bill for COVID. They're having so much fun spending trillions of dollars, they just can't seem to stop. This affected the markets yesterday as it kept that positive bid, as folks are realizing that they're continuing to support this market and do things that you never thought you would ever see before. So between the Fed's backstop and the stimulus coming from the government, we are likely to see a continued positive sentiment in the markets. Let's take a look at the charts and see exactly what is likely to occur today as we near the end of this week. Looking at the S&P futures, overnight we've seen a fair amount of action. We traded as high as 30.53 and as low as 30.2825. You can see on the grid on the left, R1 was 30.50. We traded just above that, and the market reversed about 20 handles, trading down toward the 30.20 support level, but stopping at 28. Now, there's an event that happened yesterday on the cash market that I need to address. And I talked about this in understanding how to use the market grid. There was an event that happened in the cash market yesterday. The RXT, or the extreme, was 30.23. Market closed at 30.36, which is above that. And this suggests that we're likely to see a flat to downward trend for the next 2, possibly 3 sessions. Now, typically it will stay within the confines of the market grid, and we might see an S1 hit, possibly an S2, but most likely we'll see that the market remain for the moment above the 200-day moving average. On yesterday's live stream, I discussed a really key number that's out there. The number is 3003. As long as we stay above that on a closing basis, the market's going to continue to move up in this channel that we've started. You can see there's a nice steep channel here. It's starting to see some acceleration in ppm1, which is now 0.57. ppm2 is now a plus 0.26, and ppm3 0.36. And this is important because now we're in all 3 of these indicators are in trend level, which tells us that we're going to continue to work within this channel. Now, sometimes when we get this close above the extreme, all it does is trade in a sideways mode. The fact that the futures have been up to 53, that's likely to be replicated in the day session tomorrow. Let's take a look at the ranges that are being projected for tomorrow on the cash. So we're looking at R1 30.45. That's about 10 handles above where we closed on Wednesday. R2 is 30.56 and then 30.57. And these numbers are likely to be hit at least over the next couple of days. If we follow through again today and we close higher, then that will tell us that the pattern will be broken from the close over the extreme. There's another number that is important to understand here, which is the 200-day moving average and that 3003 number. So those are 3003 to 3000 is going to be substantial support. So if you do see a reversal and a trade-off of this number, keep in mind those support levels. Taking a look at the weekly market grid, you see that R2 is 3018 and then R3 3052. So we're going to continue to move toward that 3052 level. It coincides with the numbers I just discussed on a daily. So somewhere between 3052 and possibly 3082 will be the high for this week, and it could be formed today. The thing to look for is any kind of reversals and any penetration of that 3003 level I discussed just a minute ago. This will complete the video for tonight. Thank you again for everybody who came to the live stream yesterday. I really enjoy those. Folks are wanting me to do more of them. I've got a business that I run. I just don't have the time to do them every day, but we'll continue to bring in more content as things go forward. Thanks again for watching.